Hey, what's up guys? Omar here, broker and CEO of Alden Mortgage and Ome Realty. So we're going to do a mortgage rate update. On top of the mortgage rate update, I'm going to give you the 3 reasons exactly why real estate is going to drop. Now, I've said it in many videos before that we think that real estate is going to take a big hit coming into the quarter 1, quarter 2 of this upcoming year. And I'm going to give you the 3 reasons why it does, because before, I've been a mortgage broker now for the better part of 20 years, okay? So 20 years ago, we always, in the world of sales, you always try to make sure that everybody thinks that everything is hunky-dory, everything is fine. There's always a market for this. Everything is going to be good. You know what? We could still put an offer on this house. We could still get a mortgage. I have nothing to gain and everything to lose by being deceptive. Now, in the world of mortgaging, okay, in the world of mortgaging, which you'll see when I go ahead and put the mortgage rate update, are the amount of loans we have are almost nil to none. Now, with interest rates being so high, with the cost of home ownership being so high, what are you doing? I can't sit there wholeheartedly and give you an honest answer, well, give you an unethical answer, a non-fiduciary answer, and letting you know that everything is good and you should buy now. I from the bottom of my heart, you should not buy right now. Hold off, because real estate is going to drop. And if it doesn't drop, then the world that I know does not exist, because nothing, think to yourself, nothing makes sense. The cost of home ownership, the cost of interest has peaked at levels that we've never seen. Cost of home ownership today is higher than it's ever been, even if you took inflation at its base root before. It's not even close to being the same. Now, let's get on with the mortgage rate update. 10 different mortgaging products. 30-year fix is sitting at 5.92%. 15-year fix will be sitting at 5.01%. 30-year high balance will be sitting at 5.84%. DSCR loan, which is a debt service covered ratio loan. This is a loan product if you want to get into the rental side of things. That is sitting at 8.50%. Now, DSCR loans is one of those loan products where we do not use your income. We do not use your W-2s. The only thing we look at is the total. This is going to be a non-owner, non-occupied, okay? Or non-owner investment property. Now, what we do is we take the total amount of rental income coming in versus the debt that's going out, and then we go ahead and run a ratio on that. Your debt is your principal, interest, tax, insurance, and your other running costs. And then we go ahead and calculate if you're going to get approved based on that. Bank statement loan. This is another one of those non-qualified, non-agency programs. This is where we go ahead and look at your bank statements. And if your bank statements show your debits and your credits meet the ratio of, whatever wholesaler we're sending to, that's going to be sitting at 8.50%. FHA 30-year fix will be sitting at 5.38%. 7.6 adjustable rate mortgage will be sitting at 5.99%. USDA 30-year fix will be sitting at 5.42%. VA 30-year fix will be sitting at 5.42%. And hard money fix and flip will be sitting at 9.75%. Now, the 3 reasons that we think that real estate, why we're kind of no, because real estate prices have already started decreasing, is number 1, everybody was like, oh, the cost of lumber is so high, the cost of lumber was so high, and it has, but it has dropped 62%. It hasn't been pre-pandemic levels, but it has dropped significantly. Now, we see the forecasted in 2023 that it's going to go ahead and decrease the total cost of building, which should, on new developments, decrease the cost of purchasing these homes. Number 2 is going to be, of course, these interest rates. The cost of purchasing homes at the prices that they are now, especially here in California, where you have an average median of $1 million, it's just unattainable for majority of people, especially if you look at the national average on total income. Even if you're making $150,000, you're still not going to go ahead and get qualified to that, and $150,000 is a pretty good salary. The number 3 thing, which is going to be the biggest thing, is when sellers start getting desperate. So when sellers start getting desperate because they are not able to sell their home because a bunch of people have pulled contracts on purchasing homes currently, everybody's jumping into the adjustable rate mortgages, everybody is trying to find another way an avenue to go ahead and get into a home for whatever reason I can't even figure out. When those people start getting desperate, they're going to start giving concessions, they're going to start doing price reductions, and then that is going to go ahead and hurt the total comps. That means there's going to be something that's called an appraisal gap. So you could try to sell your house for $1 million, $2 million, $10 million for all you want, but if the appraisal comes in at X amount of dollars. For instance, if you're trying to sell your house at $1 million and the appraisal comes in at $800,000 because 3 homes down the road, they went ahead and decreased the price on their home to go ahead and sell it. That is going to cause an appraisal gap for you, and then that is going to keep decreasing, and then that's going to end up hindering the total real estate market as a whole. That's going to be a really big thing, because if the appraisal comes in at $800,000, that means that your $1 million home isn't worth $1 million anymore, because now you have to go ahead and put the 20% down on the $800,000 and then make up the $200,000 that you initially put on an offer of the $1 million that you went ahead and sold. Majority of people do not have that type of liquidity just sitting around. That's just not going to happen. Now, at the same sense, you have a lot of these other people that have bad credit, okay? Now, us as mortgage brokers, this is what we do. We deal with people with bad credit, but here is the inevitable truth on getting a loan with bad credit. If you do have bad credit, yes, you could still get a loan, but you're gonna get screwed at the end of it anyway. We do have credit repair, so give yourself about 6 months for you to go ahead and get your credit repaired. Don't jump into something because, oh, I gotta go ahead and do this, I gotta go do this, because that debt is still gonna show up on your credit. That's still gonna affect your debt to income. That's still gonna affect majority of things when it comes to getting your pre-approval. So yes, can you get approved on bad credit? Of course you can, but why would you? If you have credit repair companies that work with brokers, majority of brokers, us, not really banks, not that I know of per se, I might be wrong on that, but majority of us mortgage brokers, that's what we do. We go ahead and fix different things that we could go ahead, like if we could go ahead and lump sum majority of your bad loans that you have, things that you were delinquent on, things that we could get written off, things that we could go ahead and do on our end, it would put you in a better financial position, so you're not paying an additional amount. Because if you have a bad credit, guess what? Your interest rate's going to be higher. You're not going to get prime interest. You're going to get lower interest. But that's going to be my mortgage rate update. For up to 50% commission rebate, 0% listing on selling your current home, or any mortgaging assistance, link in the description below. Like, subscribe, comment, all that other good stuff. Let me know what you think. Do you think those are going to be the 3 main things, or do you think there's going to be other categories that are going to go ahead and hinder the whole entire real estate market? Oh, stock market. If you've been watching the news, the stock market is taking a complete hit. The Fed's this last Fed rate hike, the Fed fund rate, 75 basis points. So 75 basis points, when you do hear it, it just means 0.75%. Okay, so you just take the decimal point, put it over 2 times, and then that'll be the total amount of basis points that will increase. Now, as a whole, when you're buying and selling credit, that is a lot when you're doing it back to back to back to back, and we still have a couple of more going in, and that's a big effect. Like right now, as of today, Tesla's taking tank, Rivian's taking a tank, Plug is taking a tank, majority of shopping, I think Target is taking a tank. I'll have to double check and make sure, but the stock market. Now, what happens is when the stock market takes a dump is that majority of companies are devaluated. Their market capitalization rate is very, very low. So whenever their market cap is low, that means that they have to start laying off. Now, Jerome Powell, which is the Fed chairman, he's the one that went ahead and said, you know what? We're probably going to be in a recession. We're probably, look out for it. It's going to be, unemployment's going to start taking a rise. They already know this stuff is going to happen, and I'm just trying to go ahead. I don't even know what I'm doing anymore. This sucks. This is really, 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 really sucks bad. I mean, we're sitting here at 4 loans. Like, I'm grateful for the 4 loans that we have, but like, mortgage companies as a whole are just dying left and right. Layoffs are happening left and right. Now, what do I get out of telling you otherwise? Nothing. Till next video, guys. I really appreciate you watching. Have a great Friday. This was your mortgage rate update as of what is today, the 22nd. All right.